pain at Panasonic is definitely continuing from last year into this financial year. And today, the Japanese maker of LCD TVs forecasts this for an annual net loss, $9.6 billion. This is a negative, by the way. This is largely because of restructuring costs. And this forecast loss, as you mentioned, is on top of record losses last year of nearly $9.7 billion. So we are looking at just pretty much exactly the same amount of losses from last year. So investors, of course, as you can expect, well, they definitely ran to unplug themselves from the electronics giant. Panasonic share price plunged by this much, 19.5% in reaction. Now, in a statement, Panasonic did frame its troubles just like this, saying the global economy continues to contract with much deep remaining uncertainty, due, of course, to the European financial crisis and the slowdown of the Asian economic expansion, including China. Now, because of that, sales of its LCD televisions have slumped. It's had to get prices down to get all of its products sold, and that, of course, has hurt its bottom line. Not to mention the Japanese yen, which has strengthened against the U.S. dollar, recently hitting 8-month highs, in fact, and that's bad for exporters, of course, when they repatriate profits back to Japan.
Yeah, it certainly is. Panasonic, you know, the leader for all the wrong reasons, but it wasn't just Panasonic today, was it? We've also talking about Sharp and Sony, which, again, we were talking about before. This sort of unholy triumvirate, just not so good.
Yeah, that's right. And it's not getting better for them. It's getting worse. Today, we're definitely seeing more proof of Japan Inc. really headed for the brink. And before today, Sharp had forecast a net loss of this $3.1 billion. But the update is a loss that is nearly double this, to the tune of about $5.6 billion. This is for the year ending March 31st. And for its part, Sony had a forecast a net profit of $250 million. Not a lot, but at least it's a profit, right? The maker of Bravia flat screens is keeping this, but today Sony also said it's cutting its TV sales target by 1 million units, and analysts think that that's going to hit its profit, and it might be just a third of what Sony is actually forecasting, just about $80 million or so. Now, to top this all off, Japan's TV giants right now are at the mercy of one of its competitors right next door, and that is South Korea. Samsung, for example, that's just the big name that we definitely have to talk about. It's got a nearly 30% market share of the global flat screen market. Sony, though, has just about, let's see, 8%. And talking about Panasonic, it's just about 7% right there. So the season for South Korea is definitely in full swing, while Japan Inc., as I said earlier, is on the brink.
Absolutely. And on the other side, you've got Apple still eating the lunch of many of the Japanese companies as well. It just goes on and on, doesn't it? Rami, it's always good to talk to you. Rami Inocencio, making sense of the numbers, very dismal and disappointing numbers at Panasonic.